The Bank of Canada released its financial stability report this week, noting that on inflation and any risk of a recession, the outlook is looking better. But there are still risks in the year ahead that could have a big impact on the financial system and the bottom line of every Canadian.
Over the past year, the risk of recession has diminished in Canada and globally. Inflation in most countries has come down, and inflation targets are in sight. However, there could be volatility in markets as expectations shift about when and by how much central banks will lower their policy rates. And there continue to be important geopolitical and economic risks on the horizon.
Well, to walk us through what we heard from the Bank of Canada, we're now joined by Mostafa Askari. He is Chief Economist with the Institute of Fiscal Studies and Democracy. Mostafa, thank you for joining us.
It's my pleasure. Thank you.
So, you know, the preamble of this is that the financial system, according to the Bank of Canada, remains resilient. But they are pointing out to some of these pitfalls, worried that one shock to the system may create a greater shock to the whole system in its entirety. I'm wondering, is that particularly true of Canada because of the size of our economy and population?
I think it's true everywhere. I mean, if you have a household sector that is quite vulnerable, and if there is any real shock that, you know, we see significant amount of bankruptcy among the households, in fact, and people cannot pay out their mortgage, service their mortgage or their credit card, and that would obviously have impacts on how people consume, how people work, and all those things obviously could affect the other sectors of the economy, and that would be obviously a risk and an issue that, you know, people have to be aware of, and the governments, especially in financial institutions. Yeah.
Mm-hmm. And, you know, you mentioned mortgages and credit cards, and not surprisingly, the top line of warnings, because there are a series of different red flags, but the largest red flag seems to be attached with mortgages. If the expectation is that interest rates will be going down at some point this year, why is that still such a concern?
Well, first of all, interest rates are not going to go down significantly. I mean, even the bank starts in June. If they start in June, it's going to be very gradual decline in interest rates. And we will never go back to the sort of the pandemic area interest rate. Those are just exceptional rates. So people who are going to redo their mortgages in the next couple of years, and they're going to probably have see significant increases in their monthly payments. So that's a major risk. And although the bank says in the report that those who have already have done their mortgages at a higher interest rate, they seem to be able to manage this by reducing their discretionary spending and you know, increasing their savings. So, but still, it will be a big risk.
Mm-hmm. Big risk, as you say. And then the other has to do with credit cards. You know, what's interesting about this is necessarily people have had to turn to credit cards because the past year or so has been very tough on them, and that's how they're making ends meet. And that is a red flag that the Bank of Canada is attaching to the Canadian economy writ large. Just how exposed are Canadians to risk because of their credit card holdings?
Well, it's a huge risk. I mean, the bank report actually says that those who have credit cards, they're not mortgage holders. These are just maybe renters, and they have credit cards. They have reached something like 80% of their credit amount that they can have, and their balances are that high. That kind of a high balance on credit card with interest rates that are significant for a credit card in the 20% range, they are subject to significant amount of risk definitely. And how financial institutions and credit card companies are going to deal with that, that's an issue. Whether they're going to give them some room or not, that would be a question. But definitely that's significant. That's the part that was actually surprised me when I read the report, that it is that high. It is a big risk, there's no doubt.
Mm-hmm. You know, I wonder what then, you know, mortgage, credit cards, all this is consumer focused. So how should the average Canadian be reacting to this report? Again, because it's not that the Bank of Canada governor is saying that it's a horrible situation now. He's saying that it could be.
It could be, and what they're saying is that right now, as a sort of the general idea, when you look at the whole economy, there's no reason for panic. However, there are risks and there are vulnerabilities out there that people have to be aware of, the financial institutions have to be aware of, the governments have to be aware of, that those things can happen. They would affect the economy, then the government may have to respond. So yes, households definitely are being impacted more than anybody else, any other sector of the economy, because of high interest rate, high inflation at the same time. And hopefully, if the bank can bring inflation down, at least people can sort of plan on not prices going up significantly in the future.
Mm-hmm. So that was the Bank of Canada's analysis of the potential pitfalls of the year ahead. But again, I take what you're saying, that the rates may not fall as much as people would like it to, but there are indications that the rate will fall. There are indications that inflation is getting under control, and that the risk of recession keeps getting smaller and smaller and smaller. So how much longer do Canadians almost have to hold their breath? Because that's been the position of many, just trying to stay afloat this past year and a half or so. How much longer is this going to last?
Oh, I think one of the issues is that I think during the period of very low interest rate, people maybe borrowed too much because interest rates were so low. They were buying homes that they probably, at the current rate, they cannot afford. And now the problem is that interest rate, even somebody who had a mortgage at 2%, now they have to do it at 4%, even if the interest rates go down. That's a double payment. So for many households, that would be significant and would be very hard to manage. And so they have to cut somewhere else, which means that their consumption will go down, and then that will affect the economy. And so we're going to go through that cycle.
So necessarily some deep thinking, rethinking, perhaps on behalf of Canadians.
Yes, that's right. So I think over the next year or two, I don't think things are going to be very easy for households. And especially those with significant amount of leverage and debt on their balance sheet. So it would be difficult, no doubt.
Mostafa Askari, not a great note to end it on, but still a worthwhile thing to consider. Thank you for this. Appreciate the time.
You're welcome. My pleasure.